How's it going, guys? It's Doc. Today, we're going to bring on a special guest and talk all things crypto. Over the past couple days, we've had some crashes, right? On Friday, our president announced some tariffs, and this has caused some pain in Bitcoin. We're also going to talk about some macro conditions. Is altcoin season canceled? We're going to go through a lot of things, but before we do that, I'm going to bring on our guest, Mr. Cade O'Neill. Welcome to the channel.
Hey Doc, how's it going? It's good to be here.
Yeah, I know we had you on a couple feels like maybe a week or so ago. We had a blast and we talked all things crypto, which was it's always good to get a second opinion on these type of things.
Yeah, no, it was fun. I really enjoyed making those videos with you. Felt like it got pretty great reception on both of our channels because we did kind of that companion video type of thing. And yeah, it was a ton of fun. So yeah, why not do it again?
Com- Completely agree. Before we get started, guys, I'm going to have Cade's links down in the video description here in just a second. We're also going to post this on all of our social medias, but maybe let's just go ahead and get started. So on Friday, Trump announced tariffs on Canada, Mexico, and China. And he's even threatening that there could be some tariffs coming towards the EU. And this kind of took some folks by surprise because it was announced on Friday and the tariffs took place yesterday or Saturday, with some more taking place on Tuesday. So we knew he was kind of teasing these for the past, week or so, but I don't think a whole lot of people were expecting that. And because of this, crypto, Bitcoin in particular, really took a dive here. So this is the daily candle. If we go over to the 4-hour candle, you can see this big candle here. This is when the tariffs were announced on social media in the press conference, and it really just wasn't a great response, right? Again, markets don't like uncertainty, and these tariffs in some ways kind of came out of nowhere. So before the tariffs on Friday, we were kind of, creeping up, flirting with $106,000, and then it just came crashing down. And since then, over the past day or so, we've continued to have these this downturn. I suspect this most recent 4-hour candle is we're going to be getting some futures that come out for tomorrow morning when the market opens back up, and I suspect those aren't looking all so good. So Bitcoin's down quite a bit. If Bitcoin's down, total 3 is down, right? Total 3 is the entire crypto market cap, excluding Bitcoin and Ethereum. So this is a good proxy for the altcoin season. And you can see here, we're breaking some previous horizontal resistance, which is never good. And as you could expect, Bitcoin dominance crossed 60% again. And a couple videos ago, I mentioned that I would not be surprised if Bitcoin dominance hit above 60%. I think a couple weeks ago, we topped out at 61. It's tough. I'm not surprised that we hit 60% again, but it's not something that I was really looking forward to. Before I kind of talk about some more of these tariffs, what are your thoughts on all this, Cade? Kind of a hectic past day or two.
Yeah, I mean, there's been a lot of different various economic things going on that we've kind of had to unravel and unpack a little bit. Prior to these tariffs coming around, we did see something with the Fed and the Fed actually holding steady on interest rates. And that was actually a good thing for Bitcoin. And so I think there were some kind of major kind of unresolved questions of well, I thought low interest rates were good for crypto, right? So if this is doing the opposite of cutting interest rates, why is that a good thing, right? And I think, like you said, markets just like certainty. Even though the rates weren't getting cut, there was a level of consistent messaging with okay, well, basically everything looks the same as what it did a couple months ago. Where if we looked at August or whatever, they're saying, oh yeah, things are looking so great, and then they do an emergency Fed meeting and cut rates half a point. That's not consistency, right? This is. And so I think even though rates aren't being cut, what a lot of people have previously said is kind of best situation for crypto, it's not the end of the world, right? Because people can at least just expect, or they can plan on, what they're expecting to see. So.
Yeah, nobody likes the guessing game, and I think you hit the nail on the head. Markets love certainty. We're going to talk about this arrow here in just a second, but I figured maybe let's just go through the tariffs a little bit, so that folks can kind of understand the meaning of them, and hopefully give some context to all of these things that are going on. So I really like this tweet. Not a huge fan of the GIF, but the information nonetheless was I thought informative. So right, we announced on Friday tariffs on Canada, Mexico, and China. And I think the thought process was that our president thinks that there's an unfair trade balance between us and these countries, right? And I think this tweet really summarizes this well. So, Canada, their exports to the US make up 77% of their total exports, which is quite a bit, right? Almost 4/5 of all of the goods that are leaving Canada are coming straight to the US. The same goes for Mexico, right? 4/5 or 80% of all of Mexico's goods are coming here into the US. So I'm streaming right now from Texas. We share a border with Mexico, and I can very much speak to that, right? I know a lot of the produce coming out of Mexico, and even some like cheaper electronics are coming. So it'll be really interesting to see how these tariffs affect those countries. China, on the other hand, although they do export a lot of their goods to us, it makes up a much smaller percentage of all of their exports. A really interesting thing here is then if we overlay the aid in which we are giving to these countries, right? So we're giving $28 million in foreign aid to Canada, $16 million to China, and $61 million to Mexico. So I thought this was really interesting. If we then compare the US exports to these countries, very, very little, right? Less than a fifth of US exports are going to Canada. Same with Mexico, and even less to China. This bottom one's not as big of a surprise, right? China is really big in manufacturing. They manufacture a lot of their own goods. So, the thought process is the tariffs that have been placed are going to hurt these other countries more than they will hurt us. And I think maybe this is another good time to mention that retaliatory tariffs have been announced by Canada, right? Canada is saying that they're going to be placing a 25% tariff on their goods to the US. So it's going to be interesting to see how that affects us. So this is a lot of the same data, but it's just in picture format, right? So we're talking about US exports to different countries, Canada and Mexico, less than a fifth. Obviously, China's much smaller. And then I thought this really paints a picture, right? It shows exports by country. A lot of Mexico's goods are coming to the US. So it's going to be interesting, right? We were thinking that these tariffs were going to be used as a negotiating tactic. They've now solidified and they're actual tariffs. And we're going to see, is there an imbalance here? And I guess I'm curious your kind of thoughts on this, Cade. We announced these tariffs on Friday. They've now been in place. How long do you think something like this lasts? Is this something where both countries kind of feel the pain for a few weeks and then we, maybe renegotiate and find a middle ground? Or is this something that you think could go on for months and months and months?
Yeah, I mean, I'm not at the senior levels of government, so I couldn't tell you for sure. But my kind of reaction to a lot of this is, there is a lot of people who are saying something kind of vaguely along the lines of, oh, well, this is going to hurt US consumers just as much as anybody else. And it's like, yes, that is true. If big if that these actually are continued to stay enacted. Right. And I don't know if I really believe that, because one thing that we have to realize, and I think for whatever reason, a lot of people in the US tend to overlook this, but realistically, the US is the biggest market in the world. You do not want to piss off the US consumer or whoever controls access to the US consumer. Right. And so it's China obviously is a larger market in terms of sheer quantity of people, but the Americans, obviously, I think it's a fairly comfortable thing to say, Americans are the wealthiest, largest market in the world. And so there's a lot of people who are that's where people want to sell their stuff, right? Is to America. And so if you look at the US, I mean, obviously our two biggest trading partners are Mexico and Canada. just like Mexico and Canada are our biggest, or like we're their biggest trading partner. Basically, all three of us are all our top two trading partners. However, like with the stats that you showed, there is a very clear and obvious imbalance here. And I don't use this as like a pejorative term, but really it's like, to an extent, Mexico and Canada are in effect some level of tributary states to the U.S. with with that type of trade imbalance, right? I mean, almost or over 4/5 of their exports coming to the U.S. Uh, that means it means a lot more to them than it does to us, right? Because if our trade with Mexico and Canada were to be cut off tomorrow, obviously not a particularly great thing for the American consumer, because things probably do get a little bit more expensive, but also, like, it's not like it completely shatters our economy. Where if you look at something like Mexico, where 80% of their exports now just got 25% cheaper, that shatters their economy almost overnight, right? And it doesn't matter what their retaliatory tariffs do, because like, yes, they import some stuff from us, but it's just not even close to like the same magnitude in terms of percentage of GDP. So, I think, in my opinion, that's how I'm looking at it. I think there's a level of just like, kind of like what you were saying. I think the current administration wants the like trade balances to be a little bit more reciprocal, and they're just not at this point in time. And so I think, he's trying to take actions to make it a little bit more, a little bit more balanced on either side. Because I think the kind of reasoning goes is, even if we keep tariffs, which I wouldn't say is necessarily like that is what would happen. But even if we keep tariffs, if you're exporting and importing the same amount, the tariffs is effectively washed to zero, right? I mean, yes, the consumer is probably going to be paying for that on both ends of the deal, and that's where the argument of things getting more expensive comes in. But from like a national, trade imbalance perspective, it doesn't really matter. And I think that's the point at which you could drop tariffs down to zero. Again, assuming that they actually hold. But I think that's what a lot of what we're trying to see right now is just a little bit more protectionism over like the American economy and manufacturing capabilities, a lot of that type of stuff.
Gosh, I think you said that so well. Like, in particular, I think you could have just summed up that whole conversation in those last couple of sentences you said. You'd mentioned, if trade were equal, these tariffs would wash each other out, right?
Mhm.
But since they're so lopsided, right? Canada, Mexico, they export such a large percentage of their goods to us, it is lopsided, right? And I think that was the goal of these tariffs. It really is gonna be interesting to see how this plays out. I quickly brought this up as you were talking, because I know we're talking about GDP. I mean, the US's GDP is quite large, right, in comparison to these other countries. Obviously China's number two, but the US makes up a quarter of the world's GDP, right? Obviously, China is, oh, of course, we're getting a little technical difficulties here, but China was number two. China's number two, and I would imagine if we scroll down, right, Canada's number nine, and they account for only 2% of the world's GDP, which is quite small in relation to the US's. And I would imagine we might be scrolling. Yeah, the Mexico is less than 2%. So I think this lopsided approach, I think you hit the nail on the head, and really underrated, especially when you see the percentages. They really speak for themselves, right? We're a quarter of the world's GDP versus Canada, they're a 50th, right, of the
Mhm.
world's GDP. So really interesting there. I know you had a screen to share. I've also got some other thoughts as far as other countries raising interest rates. But I'm curious, did you wanna jump into some of your segments?
Sure. Yeah. I mean, I can just show kind of an overall status of what's happening within the crypto market, right? So obviously we can see the crypto bubbles. I guess this is weekly. Let's just look at daily. Very, very rough, kind of, on all sides here. Not a green bubble in sight. So basically the entire, and I believe this is all top 100 coins tracked. So basically every single one of the top 100 coins down. I don't know that this is particularly surprising for all of the reasons that we just talked about. So we won't continue into that too much longer. But then we can also see one of the things I've been tracking. You had mentioned the total 3. I usually like to track the total 2 just because it's everything minus Bitcoin. What we could see is, and I've mentioned this on my channel for like months at this point in time, is these are the 2 zones that I actually care about. Anything within here, in my opinion, does not really matter to me at all. This is tracked by the weekly, which is why there's only so few candles in here. I guess we could even go out to the daily just to give some more detail here. But like until we start to break outside, we can see we had a couple rogue wicks here and there. But unless we actually start to break and close outside of this zone, I'm not particularly worried about what's happening, particularly within the altcoin market. Obviously, we have broken out of it currently. Who's to say, if this will stay broken out or, whatever. But basically what I'm looking at here is we were seeing a lot of consolidation in the market. We have seen a break to the downside, obviously, here out of what looked to be a wedge that was forming since like the end of November. So, definitely not the greatest thing to see based on kind of like market structure for the total 2. And then we are appearing, at least at this point in time, to have broken out of this zone. So with that being said, if we go back and kind of look at where we're at, we have now dropped below like the previous highs of that the altcoin market hit back in March of 2024. Actually, let me get rid of this so we can see the dates. But yeah, back in March of 2024, we've got kind of this next fib level coming in here. We can see a lot of liquidity here, tops being hit here. So this should serve. We even actually saw this rogue wick that came down, even hitting this level. So this could be a relatively decent level of support potentially. But really, like these were the high liquidity zones here to the bottom and here to the top side. So the fact that like we've actually broken out of this, I would say is not particularly a good thing. I do think it's possible that, if we could get held up here, which I think would be a good thing. But from there, we're probably going to see back down at like this $1 trillion mark, which obviously would be a pretty far ways to fall from here, about 25% pullback. So, obviously not the greatest thing to see, but based on what we're seeing in the market, this to me, I think there's a lot of fear, a lot of overreacting. As I mentioned, actually, I think my video is coming out in like a couple hours, but when I was recording it last night, I basically said like tariffs don't, like there's nothing with these tariffs that actually directly impact crypto. Obviously, there's a whole ton of indirect potential ramifications, but as of there's no tariff on Bitcoin or anything like that, right? So having a little bit of clarity into like how this is going to affect the market, we don't actually have any of that yet, right? I think a lot of people are driven by fear right now of, oh yeah, it's going to raise cost of living by 50%, and then we're all going to go into economic meltdown, all this type of stuff. Maybe, but I realistically, I don't see that happening, right? I mean, that to me seems pretty unlikely and maybe a little bit of a stretch. So that's what we're seeing, at least from the total 2 market cap. So obviously, not the greatest of times to be holding altcoins in particular. I would even say Bitcoin as well. But, overall, nothing's fundamentally changed, right? Well, I mean, what's going on right now could fundamentally change, but at least as of right now today, nothing has truly fundamentally changed within the market.
Yeah, I think I really like that perspective, and I kind of like the perspective of looking at the whole crypto market. Everything's down. I really like your zones of liquidity that you have up there. I think that kind of just allows us to see like, yep, we are testing the bottom range, but hopefully we can get a bounce here. And as you're saying all of this, which I completely agree with all of your takes there. I'm sure you follow Marty Party on Twitter and kind of seeing some of his work with some of the liquidations. It kind of seemed like that was pretty prominent last week, right? With all these exchanges, Binance being the biggest one, sending all of this funds to Wintermute to sell to kind of suppress prices and wash out leveraged longs. I'm curious if we've got this fear of tariffs, and like I agree with you. You said like this doesn't necessarily directly affect it. It's just kind of a sentiment thing, right?
Mm-hmm.
People taking money out of risk on assets. I'm curious, that in combination with some of maybe some market manipulators, and then maybe something that we'll talk about here in a second with the Bank of Japan.
Sure. Yeah, let's do it. And also, I've got I've got a point I want to bring up kind of with this leading into alt season. We can talk about that after we go into Japan as well, if you'd like. But I do think a lot of this, in my opinion, potentially makes me even more bullish on an alt season. So we can get into that. We can get into that in a second, because I'm sure there's some of you thinking like, what? Bullish on alt season? Look at the red, look at the red candles. So, well, but yeah, we can get into that too.
Yeah, I'm actually excited to hear your take on that, because I'm bullish on alt season too, but gosh, in times of fear, it's always kind of, it's nice to get some reassurance, right?
Yeah, yeah.
So this is Dr. Benjamin Cohen, right? He has the website Into the Cryptoverse. I'm sure you're all familiar with his YouTube, but I thought this was a really interesting take. This is from the second week in December, and he's responding to someone mentioning he knows there's going to be a sell-off in December, and he mentions if the Fed cuts, which they did, and the Bank of Japan raises rates, will likely go into a correction. And then he said, if the Fed cuts and the Bank of Japan pauses, probably not a correction. Well, that is exactly what happened. The Bank of Japan did, in fact, raise their interest rates, the highest rate in the past 17 years, right? So the Bank of Japan, for those that aren't aware, they had next to 0% interest rates. They had very cheap money. And a lot of people were using this as an arbitrage opportunity, right? They were borrowing funds from the Bank of Japan and using this to go into risk on assets. And then in August was their first interest hike. And we'll go back memory lane here a little bit. If we scroll back, I guess I'll go on the daily chart just so we don't have as many wicks here. But this yellow arrow, this happened in August, right? And this is when the market wicked down just below 50,000. It hit $49,000, and this was the carry trade. This was when the Bank of Japan did their first interest rate cut. And I remember when this happened over the summer. I was actually visiting some family in Las Vegas, and it was tough, right? Alts got absolutely decimated. And that was a tough time, right? So I'm curious, we're now seeing a dip here, and just for fun, this dip looks much more significant compared to this one that we're witnessing here. But I'm curious if this dip, I think it's easy to blame these tariffs, but I think there's more at play here, right? Bank of Japan raising their rates. We saw when they did this in August, there was a little bit of a pullback as well. And I don't want to go too, tinfoil hat here, but typically when things happen for the first time, it's a novel problem, right? And humans, we are emotional creatures, right? We kind of respond accordingly. I think this is the second time we've seen the Bank of Japan raise their interest rates, so it takes some luster off it, right? It's not as novel, or maybe it's not as worrisome, or put differently, it's kind of expected, right? The ball was started earlier this summer. So I think in a lot of ways, there's kind of this perfect storm, right? We're talking about this administration putting on some tariffs, right? We're talking about how the carry trade 2.0 is happening now. And then just some overall market sentiment, fear kind of driving in parallel with market manipulators selling a lot of their crypto. So I think it's kind of these three things lining all together. And I guess the last thing that I'll say, before I hand it back over to you, is it's really easy to have these fears over the weekend. And this is actually not new. What happened last weekend? Last weekend was the DeepSeek NVIDIA storyline, right? Everybody was very scared going into Sunday night. If you were to look at the futures on the stock market on Sunday night, they tanked. We saw NVIDIA then follow suit on Monday. But guess what? By Wednesday or Thursday, that story kind of eroded, right? We found out then, hey, maybe DeepSeek spent more than $6 million to develop their AI, more than what they initially claimed. So I suspect kind of the same story is going to play out here, right? We have some initial fears over the weekend. Again, this was just announced on Friday, went into play Saturday. I think by midweek, we're going to get over some of these fears. We have some unemployment data that comes out later in the week. If that's favorable, that could lend to, some hopefully some good news that Bitcoin needs. So that's kind of my take on thing. You know, we got a couple different things playing all at once, and maybe that's impacting some of these things.
Yeah, yeah, it'll be interesting to see, kind of how that impacts. I do think there is kind of a little bit of potentially a perfect storm going on here between some of the tariff announcements, some market manipulation, some wider fears, just like you said, with like economic data, things like that. I think there's a lot at play here. So yeah, it'll be interesting to see kind of what shows up, how things kind of happen and kind of work about themselves through this whole process. I do think this is going to be, in my opinion, a pretty strong like buy the dip type of moment. But again, I will say this feels a lot more risky of a buy the dip type of moment than what we've seen in the past, right? Because in the past, at least in my opinion, it was very clear to see, at least it was very clear to me to see that like there was a lot of manipulation going on, right? And there was a lot of liquidations, and the dump or like the rogue wicks that were happening were purely because of liquidations. This is not that, right? I mean, this is a little bit more of like there is actually some potentially damaging economic events happening. Whether they actually happen or not is a completely different question. But at least so far, that's kind of what we're seeing here, right? And so, yeah, it'll be interesting to see kind of how it develops over the next like week or two.
Yeah, I completely agree. And you're right. Like last year when this happened in August, when we were way back here, I don't know about you, but it was comforting to know like, oh, we're in the halving year. We still have the post halving year to come. Well,
Yep.
guess what? Fast forward, it's 2025. We are now post halving year. And I think conventional wisdom says this is right, the post halving year. This is where we're going to have our quote unquote mania phase. And then afterwards, we're going to get a mid year, right? Mid election year kind of fall, which would be 2026. So I think that in a lot of ways makes it kind of more real as well. Maybe that's why folks are so fearful. And, as we're talking, I looked this up and this actually kind of surprised me. I was expecting this number to be much, much lower because if you go on Twitter, it feels like the sky is falling, right? Everyone's in
Yeah.
panic mode. I was really expecting this number to be, in the 40s or low 50s, but maybe this just shows things aren't necessarily as bad as Twitter would say.
Well, I think that's exactly it, right? I mean, you've got Twitter. Yeah, I mean, Twitter is the most reactive thing on the planet, right? An ounce of good news gets shared. Oh my gosh, we're going to $10 billion per Bitcoin. It's like, okay, chill. And then it's like the first bit of bad news happens. Like, oh my gosh, Bitcoin's going to negative 10,000. You're gonna have to pay somebody to buy your Bitcoin. It's like, come on, like. And so I do think like, and this is one of the things that I'll cover fairly frequently as well is the fear and greed index because of exactly this, right? I mean, yeah, Twitter sounds bad and people are all, mad and whining about it per usual, as always happens on Twitter. But what we can see is like price is still holding up. I mean, altcoins are getting beat on. I think that's fairly fair to say. But even if we go back to looking at the total too, I mean, we're still over halfway up the run that we made in November on altcoins. We need to remember, I actually got it loaded up right here. At the beginning of November, we were sitting at a low of about $850 billion. We made a run all the way up to about $1.6 billion, so about a 2x in the entire altcoin market. We're still sitting at 1.2 trillion. So we're up like 50% from the lows that we saw in November, yet somehow people are whining about it. Why? I'm not exactly sure. And then back to your point on like your Bitcoin chart, if we look at Bitcoin, like look at that. Like here, yeah, actually let's move over to the Bitcoin chart just so we can see.
I was just going to ask if you wanted me to bring my
Yeah,
screen
yeah.
back
Let's
up.
move your Bitcoin chart back up just so we can, because I know we've been working off of that. But look what about that indicates that we are in this like terrible market. We're in the bear market. Things are collapsing. The world's ending. Yet we're like closer to 100,000 than basically we've ever been, other than outside of like the past 2 or 3 months, right? Well, doesn't make any sense to me at all.
I think. Oh, sorry. Go ahead.
No, you're good. Go on ahead.
I was gonna say, I think I was watching one of Sam's videos, my financial friend, earlier this morning, and he made this comment that like really resonated with me. He said, you know, Bitcoin was at 109,000, now it's 97. So there's a $12,000 point swing. Well, just a cycle or two ago, Bitcoin wasn't even at $12,000, right? So these swings are much larger from a psychological perspective, right? Oh my gosh, it fell 12,000. When in reality, this is still just, right around 10%, a 10% drop, give or take a few percent. So I think a lot of folks are still kind of focusing so much on the net change when the percentage isn't necessarily as bad. And I agree with you. If you look at this chart, this actually looks really healthy to me, right? We're just seeing big spikes to the up, a little bit of consolidation, big spikes up. I mean, if we go all the way back on a weekly chart, I think it's really evident, right? Right? We have these big spikes up, some consolidation, some big spikes up, some consolidation again, big spikes up, an 8-month consolidation, and then another big spike up. In the grand scheme of things, on a weekly chart, this just looks like, a couple months of consolidation before we have our next leg up. Now, obviously, Cade and I, we're not financials advisors. We don't have a crystal ball, but I think we would both agree that with all the liquidity in the market, right, it's still Q1 of the post-halving year. I think there's still some juice left to squeeze. I don't think this is the top of the market. And by all means, I cannot see into the future, right? But it just feels like from a market sentiment, there's still some gas left in the tank. And I guess just real quick, I'll bring up the 2021 chart here. This pattern here, right? This double top seems a lot different than this leg up consolidation. Now, granted, anything can fall at any time, but that's just kind of my thoughts from a really broad overview. It seems like there's still some gas left in the tank.
Well, and one thing, so maybe this is a good point to transition into my thoughts on the alt season and altcoin market, all that type of stuff. Just because I think what we're seeing here is two things, right? And both, I don't think both of these can be true, right? So first off, we see an altcoin season happen. The reason we see an altcoin season happen is because nobody expects it to, right? This is the thing that I really have been like, if any of you are have been listening to me in the recent past, you're probably starting to tune out at this point, right? Because I've really been like beating this horse a lot over the past couple of days, because I don't think people quite get it, right? The whole thing is like, you need to understand the reason things like this happen is because nobody sees it coming, right? Doc, let me ask you a question just for rhetoric's sake. If I told you that altcoin season was going to happen and you were going to make 100x on, let's pick a coin. Let's just pick a random coin. Ondo. Would you buy Ondo?
I would borrow as much money as I could to buy Ondo. I would be leveraging my savings in any loan I could get my hands on.
Same, right? I mean, but that's exactly the point, right? If you told somebody, hey, this is going to go up 100x, everybody would be doing exactly that same thing. So if it was known, then obviously people are going to try and front run it, right? So that's why these like crazy runs are so surprising to all of us, is because nobody expected it to happen. I'll ask you the same type of question and in a different light. Doc, if I told you that on November 28th this year, the world is going to go into the second Great Depression, how would you change your moves accordingly?
I would probably sell a lot of my assets, right? And take some risk off the table, knowing a, global or life-changing event is on its way.
Exactly. And I mean, same, right? I mean, everybody would. And so that's the thing, is like, if everybody knows it's happening, but then you also have to think, if everybody did that and everybody de-risked like crazy, it probably wouldn't happen, right? Because everybody's de-risking, everybody's being more responsible with their money. Usually, in order like for things like this to happen, you have to have some kind of gross level of like excess, right? Whether that's spending, whether it's debt, whether it's leverage, whether it's some combination of all three. Usually it is some combination of all three. That's what happens. They're like, that's what causes these types of meltdowns. And same thing with on the other side is excess fear and people being underallocated, all this type of stuff. That's what causes the excess like melt ups, right? Is because everybody's like, oh my gosh, this has just gone up 50x. I need to go, get a loan on my house and put it all in crypto. Nobody gets a loan on their house and puts it in crypto when you see this, right? People get loans on their houses and put it in crypto when they see this. Is the unfortunate reality of things. And so that's why I think this is more bullish in the case of having an alt season. And this is kind of where I was getting to the whole time. It's like, I think all of like this type of stuff makes me believe that there could be an alt season. This type of stuff and everybody calling for an alt season makes me believe it's not going to happen. Right. So that's the first kind of outcome. The second outcome, in my opinion, would be we don't, in fact, get an alt season. But with that, I also don't think we get the 70, 80, 90% market-wide meltdowns that we're going to see across the market. Because usually, as I mentioned kind of in the earlier examples, is when you have those types of meltdowns, it's usually because there's a breaking point that essentially breaks the market in terms of like excess spending, excess debt, excess leverage, some combination of all of them, whatever. I mean, leverage is kind of debt in a different way, right? So, but like that's the type of thing that causes the market to melt down, is because you have all that froth going on. Because all that froth is there, once the first domino falls, it kind of just everything unravels. Think about like, Luna or Three Arrows Capital, some of what we saw last time, or FTX. It's like, yeah, things were looking great when everything was going up because everybody was running 5, 10, 50, 100x leverage. Yeah, you're making a ton, but the second the first one starts to go underwater, then you sell, and then the second one goes underwater, and then you sell that, and then you just kind of have this cascade effect, and then the market crashes. And that's exactly what we saw. So that to me is like the second outcome of, okay, well, if we don't see this ridiculous run, we're probably not going to see these ridiculous like sell-offs to the downside either. So that's kind of my thoughts there.
As you're saying all of this, I'm like thinking of the meme SpongeBob where he's like, write this down, because you hit the nail on the head. So you said two really, really important things here that I want people to make sure they're picking up is one, the price of admission, right? So we're talking about like fear and greed and kind of back and forth. The price of admission to play in the crypto land where 100x's are possible is volatility, is fear, right? If you didn't want the fear, you could do the opposite, right? You could put your money in the VOO or the S&P or the Russell 2000, right? Because you're trading potential returns for more safety, right? It's this teeter-totter.
Yep.
So that is huge. I'm so glad that you touched on that because that didn't, right? We're in this every day, but that didn't initially come to mind.
Yeah, no, it's one of those. Yeah, I mean, people don't understand, I think fundamentally in the crypto market, the whole risk to reward type of thing. If somebody's offering you, 100x gains, it's probably because you're going to lose all your money. You could hit 100x gains, right? But it's probably because you're going to lose all your money. And that's just how it goes. People who don't understand that don't understand investing 101, in my opinion, right? Maybe that's a hot take, but there is no such thing as a free lunch. If somebody's going to be giving you outsized returns, it's not like crypto is this like unicorn market that's just fundamentally different than like TradFi, right? People still expect or want the same amount of returns, and the market balances accordingly. So, if you say, hey, Cade, I'll give you 10% to give me, USDC to USDT, like be a liquidity provider for that, I'll be like, yeah, sure, that's awesome. But then at some point, I'm going to be like, hey, Doc, did you hear? I'm getting 10% to trade US dollars for US dollars. You're like, oh, well, that's awesome. I'll come in and do it for 9%. Okay, well, now Doc just takes all my money because I was doing it for 10. And I say, okay, well, I'll come in for 8, right? Like this is what makes markets work. And so because of the perceived safety of, let's just say, USDC to USDT liquidity providing, again, who knows, one of them depegs, and obviously that's a big problem and you're losing all your money. But if that doesn't happen, then the perceived safety of that is very, 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 very high. So because of that, I might be willing to take 2, 3, 4% return because it's very, very safe. Or if I go, invest in I don't know, some micro cap, I'm going to be wanting a really, really high return. That's just kind of how that works.
Yeah, I really think you hit the nail on the head. And kind of the other side to that coin is there are times and place when it's okay to move assets into assets that are not as volatile, i.e., more safe. So, for example, right, we're hoping everyone listening to this is taking profits as they go, or as the market starts to get frothy again, you're taking assets or some money off the table, and you are putting them into safer vehicles, right? The VOO, selling options on Tesla or whatever, because eventually, if the 4-year cycle holds true, there will be a correction in Bitcoin, right? And that could be a life changing or life altering buying opportunity, right? So I think it really just kind of depends, what your risk appetite, is, and where you are in the market. The other thing that you said, sorry, I'm kind of jumping all over the place. The other thing that you said that I think was really important is a lot of these things are unexpected, right? If we're going to get these huge altcoin runs, they're going to in some ways feel like they're kind of coming out of nowhere. Maybe like this current dip that we're seeing right now, right? You kind of in some ways have to zig when others are zagging, because if it was this easy, everybody would be doing it.
Yep. Yeah, exactly. So, and that's the other thing too, that I want to like prepare people for. And I can even actually just come back to my Bitcoin chart. But this is what I want to prepare people for, right? Is because we talk about like, these are kind of the 3 major liquidity zones that I've seen in this like larger consolidation period. If we fall back out of that, we're probably looking at 85. And if we fall back out of that, we're probably looking at like 73.5 realistically is like major levels of support. Like, look at all the whining that's going on and look at where we're at, right? Like the problem is if you think this is bad, boy, you have another thing coming, right? It could get so much worse, and realistically, not even that much worse. Like we drop down, let's say we drop back down all the way to 85, or even let's say we go, the world ends and we drop back down to 73. We are still above every single highest point that we saw in 2024. Please explain to me how that is so bad, right? And I actually, I forget the name of the person, which unfortunately is too bad because I want to give him credit. I may go like on my YouTube channel and try to find it, but I did get a comment the other day, and this person basically said, the market is essentially the process of transferring wealth from the impatient to the patient. And I think that's completely fair, right? I mean, the people who are whining about this type of movement are the people who are impatient and the people who are probably going to be panic buying on this type of run and panic selling on this type of run. Probably just how it's going to go, right? The patient people are the ones who are buying down here when we see these liquidation wicks and everybody's calling for the end of the world. I know you pointed to this one because this was the yen carry trade unwind. People think it's the end of the world. Oh, Bitcoin's going to 30K at this point. And, we wicked down below 50, but, look at what happened right after that, right? So these are the people that are obviously losing money, and the people who are buying here are the ones that can see kind of the forest from the trees here. So I just want to like kind of show that and pick that out on the Bitcoin chart, because I do want to prepare people for the fact of like, I'm not trying to like suggest that this is going to be the bottom and then we're going up only from here, right? Like we may make it into the low 90s. We may make it back down to 85. We may make it back down to 73. All of these are possible. And if you're not prepared for that, get prepared, I would say, because it's crypto. Anything can happen. Also, we could wick and go up only, never see, sub 100K ever again. That's possible too. Hard to say for sure, but just based on what we're seeing in the market, it's only just begun in terms of like a larger correction that could happen. So just always keep that in mind. Make sure you're not doing anything crazy, calling the bottom here and mortgaging your house to put it all on 3x long Bitcoin or whatever,
Please don't. Yeah, please don't. I think the best way to navigate the crypto market is to have a plan for all of these scenarios that you just talked about, right?
Yeah.
If crypto goes up, take some money off the table as it goes up, right?
Yep.
If it starts to come down, you need to have the conviction that when you pulled the trigger to purchase, that you knew this was on the table. This could potentially happen. I think the only thing that I wanted to mention about that is, we're talking about these $73,000 levels. I would imagine, and again, I don't have a crystal ball, but within the next 12 to 18 months, there is probably a high likelihood that we revisit some of these levels again if the 4-year cycle is in play. So again, kind of just echoing what you said, it's good to have these things on your radar, because if you're only looking at a 4-hour chart and you're zoomed in so much, you can kind of lose sight of a lot of these things.
Yeah, no, completely agree. And like, one of the things that I've actually found as I've kind of matured in my investing journey is I've kind of figured out that the best way for me, at least personally, to not lose a whole bunch of money is never do things in absolutes, right? So again, this is not financial advice, despite Tyler's trolling the chat. Despite what Tyler may tell you, I am not a financial advisor. This is not financial advice. But I'm just essentially sharing with you some of the things that I have found to work. Not doing anything in absolutes is one thing that I found to work. So for example, what I'm meaning by that is, like, let's say we're here at 97K Bitcoin, and let's say I'm not an entrant in the market at all. Like, this is my first time, like, okay, I want to buy Bitcoin. This appears to be a pretty nice dip. I'm not going to go put 100% of my funds into Bitcoin right here, right? Because I'm prepared that we may hit low 90s. I'm also prepared that we may hit mid 80s. I'm also prepared that we could hit low 70s. And who knows, maybe there's this crazy liquidation wick that happens while we hit low 70s, and maybe we drop even back down to sub 50s. I think this is exceedingly unlikely, in my own opinion, but it's crypto. Anything can happen, right? So what I would do is, maybe I buy 10%, 20%, 30% in Bitcoin here. We hit this level, maybe I'll go buy another 10 or 20%. We hit this level, maybe I go buy another 20%. Maybe we hit this level, and I'm buying as much as I reasonably can buy. And then, if we hit like here, maybe I'm starting to consider the use of low leverage. That's where risk comes, though, because if we drop down to 20K, then you can get burned. So, but that's essentially how I'm looking at it, and how I'm not just going to top blast or whatever and put all my money in here. And then likewise, like Doc was saying on the way up, we break new all-time highs, maybe take a bit off. We put a little bit in here. Maybe, we can see this is a very high liquidity zone. Look at all the wicks right here. Maybe take a little bit out of here and wait for another bounce down. And another way that I found that's easy to look at this, or is helpful to look at this, is if you go in and you take a look, don't look at it in US dollars. Look at it in crypto, right? Let's say right here, I buy 0.1 Bitcoin, and then I buy a little bit more here, and then everything goes up and I sell here. And then maybe I come back and I buy some here. Well, I may have turned that 0.1 Bitcoin into 0.11 or 0.12 or 0.13 Bitcoin by doing this type of act. I actually have an altcoin that I did that I did this exact same thing on. And I actually, I started viewing it as I'm looking to acquire as many of these as possible, regardless of value, regardless of the US dollar value. Obviously, when things go down, it makes it a little bit easier to do that. But I did purely when it was range trading, right? And so I think I started out, I ended up buying 2,000 or 2,800 of these. I ended up with I think I'm at 7,800 or just shy of 8,000, I want to say.
Wow.
And all the while, the price has actually gone up 15 or 20x. So I turned $100 into $4,000 or something like that. Which is really nice.
That's awesome.
Yeah, but that for me was helpful, because I was looking to acquire as many of that type of token as possible, irrespective of the US dollar value denomination. And then also never doing things in absolutes, right? Going in a little bit here, selling half when it hits this certain point, buying another 30% when it hits this point, buying another 20%, just doing that. And I've, so far at least, have been able to be relatively successful with that. So again, another, possible tip if you're looking for ways to potentially be trying to improve your investing game in the market that we're sitting in.
You know what I heard there? You have a plan. You're going into this with a plan. If the market dips to a certain level, you're going to deploy capital at these particular levels. And, as I'm hearing this, one thing that I did, and I'm just going to really quick share my screen, is I stole this, I stole this from Benjamin Cohen, but his website, this is Into the Cryptoverse, he has these risk levels, right? And he always talks about, once Bitcoin hits a certain risk level, you take a certain percentage off. So for example, if Bitcoin hits a 0.6 0.5 risk level, you take maybe 10% of your bags off. And then if it hits 0.7 risk, you take another 10% off or 15% off. And if it hits 0.75, you're taking 20% off, right? So this is a really, really good tool. It is unfortunately behind a paywall, but there's a lot of really good info there. So just kind of something to think about, put on your radar, for lack of a better term.
Yeah, no, I think that's really, really good. I know Benjamin Cohen has a bunch of this really, really, really good stuff on his Into the Cryptoverse site, which is really cool. But yeah, and honestly, like if I had to give a guess of where we are right now in terms of like risk to reward, I feel like that feels about right to me, right? 0.578. Yeah, I think there's still plenty of upside to be had, but definitely not like buying in at like 30, 40K, right? I mean, 30, 40K, it's like shooting fish in a barrel. There's almost no possible way that you lose, assuming that Bitcoin actually continues to be a relevant asset class. So, I think that kind of metric there seems to look pretty reasonable overall.
I think so too, right? And if you look at the last bull cycle, risk hit above 0.9 at one point,
Yeah.
And obviously it's different based off the time frame, but the price here when we had a risk level of almost 0.9 was $52,000, right now the price is 97,000 and we're at a risk level of 0.7, or excuse me, 0.57. So it just kind of puts things into perspective. But yeah, having a plan on when to take funds off the table really, really goes a long way. Cade, what have we not talked about that you want to share before we wrap things up here?
Overall, I mean, I think I've had my soapbox moments several times today. So yeah, I don't know that I've got anything too much to go over like separate from what we've already talked about. I think kind of like big picture, in my opinion, everything kind of stays the same. I don't my view for the crypto market hasn't really fundamentally changed. That's not to say it can't. Obviously, if depending on how the tariffs go, that could potentially change things, right? And that's what we were talking about earlier. These wicks are like this dip down is a little bit different than some of the past, because the ones in the past were purely manipulation. These I think are highly manipulated, but I don't think they're purely manipulated. There are some things kind of outside of crypto that are impacting this that could change the outcomes. Again, I don't think they will, at least at this point in time, but they could. So, we'll have to see and kind of see how things look, as we kind of go into it. One thing I will say, actually, if you want to pull my screen back up for Bitcoin, one thing that I've done in the past is I'll only use this on the daily because I don't feel like it's super reliable on the hourly. But if you look at the Bollinger Bands, historically, like price on the daily is not often outside of Bollinger Bands. Historically, it's actually more just wicks than anything else. Obviously, we can see on this crazy run up, we saw some candles close outside the Bollinger Bands. We saw like one or two here. But like on the downside, usually it's just wicks only, right? I mean, we have to go back quite a ways to see like actual full candles closing outside of the Bollinger Bands. So what we can see here is, so price is actually squeezing a little bit in terms of Bollinger Band movement. We're actually closing outside of this Bollinger Band today. So this is going to mean one of two things, right? What I would say is this does not stay outside of the Bollinger Band for more than probably 3 or 4 days. Again, just historically based on what we've seen, right? So this is probably, we're looking at a low here. Again, is this the macro low? I don't know. Could it, kind of bounce around here and then continue to drop further? Probably, right? Like who knows for sure what's going to happen, but at least in the short-ish term, it looks like we are at a little bit of a low here and we should be seeing some level of relief. Now, that's not to say it's going to bounce right immediately back up to all-time highs. It could just even kind of find some support before we continue to go lower, right? Hard to say exactly for sure what's going to go on, but that is kind of what we're, at least in my mind, what we're seeing here from like a technical perspective is we are pushing outside of the Bollinger Bands. And again, like, don't trust me, don't take my word for it, right? Just look historically at how frequently this happens and how long they stay outside of the Bollinger Bands. So, that's kind of what we're seeing here. Again, as I said, there can be 2, 3, 4, 5 candles in which we are outside of the Bollinger Bands, but it's usually not a sustained period of time. So the fact that we are starting to kind of close outside of this, usually means we shouldn't be seeing a similar movement like this continue to happen again, at least in my opinion. It's the crypto market, anything can happen. So
but maybe a good tool to use to put your stop losses in, right? If you're leverage trading, put that stop loss, give yourself a little breather room or buffer room, but set your stop loss, maybe 5 or 10% below that Bollinger Band to avoid getting liquidated. And that could be one of maybe a few tools that you use when you put your leverage trades in. So I absolutely love the Bollinger Bands, especially on the daily chart. All right,
yeah,
guys. Well, this was an awesome stream. I'm glad we did this. I got to get better at looking at the chat because I see the chat just blowing up there in the background. But really, really want to appreciate, or rather, I appreciate you coming on to the channel. For those that are on my channel, give Cade a follow. I'm going to put his YouTube up here in just a second. And of course, here we go. So follow Cade. His link's going to be down below. He provides so much good insight. And guys, he rips videos. There are posting super, super frequently. Great news source. I'm also going to put his Twitter down below as well. Awesome source of news. He's been in the market for quite some time too. So a very, very reliable, trusty source of information. Any final words for us before we head out?
Yeah, I mean, thanks for having me on your channel. It was a fun time to just kind of chat, talk about things. I always enjoy talking to you about the market and where we're at, a lot of that type of things, or a lot of that type of stuff. So, and then also I know I did a post on my channel to bring people over, and hopefully some of them showed up. If they did, definitely like the stream, subscribe to Doc, all that type of stuff. Watch a couple of his videos. I think it'll be very, very easy to see just how good he is, at the YouTube game and all that type of stuff. So yeah, definitely make sure you're following Doc. Yeah, let's continue doing this more. It's a ton of fun.
Absolutely. Appreciate the kind words. Learning as we're going, but having a blast doing it. Guys, we appreciate you tuning in. Like we said, follow Cade, subscribe to him, and we will see you guys